Mortgage rates remained firmly in the mid-sixes this week, and we are finally starting to see small signs of life in the real estate market from these lower rates. New listings have had a nice increase the last 2 weeks. The number of homes having price decreases, which should be rising until November, have completely stalled out for 4 weeks straight now. And the number of people applying for mortgages, at least this week, is increasing again. And all of this is happening with mortgage rates only around 6.5%, which is a lower rate than we've seen in the last year. But it's not like these are low rates. So, exciting things happening this week. We'll be covering all of that and much more in this week's market update. My name is Michael. I'm a real estate agent here in the Dallas area, and every Monday I give you a weekly update covering all of Dallas and Collin counties as well as the national market. We're looking for trends. We're tracking mortgage rates as well as mortgage purchase applications, as that's our best leading indicator to what demand will look like 30 to 90 days from now. We're looking at things like median list price, days on market, how many homes are having price decreases, what's inventory looking like, and if you stick around until the end, it's my favorite part, the top 10 ranked hottest and coolest cities and zip codes in all of Dallas and Collin counties. If this sounds like something you're into, make sure and hit the subscribe button. And if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. I've helped every one of these yellow dots find their little piece of Texas, and I'd love to help you too. Just call, text, or shoot me an email. All that info is in the description below. Okay, today is August 19th. Let's see what the data is telling us. And if this is an old video, you can click the playlist here, and it'll take you to the latest weekly market update. First up is market news. An interesting report came out from Redfin this week stating that investors bought 1 in 6 homes last quarter. That's Q2 of 2024. So that's 16.8% of homes sold went to investors, which is an increase of 16% from a year ago. And by comparison, total U.S. single-family home purchases rose 6.7% during the same period. And this is not surprising at all, as investors are going to be much quicker to come off the sidelines than consumers. Investors who are using financing know the clock has started on rates dropping. They want to lock in the low prices of today and refinance at the rate of tomorrow. But actually, 69% of investors pay in cash. But their reasoning is the same. Once rates drop, that means demand goes up, and that means prices go up. So even the cash investors are buying now because of the rate drop. And I can tell you, I have investors reaching out almost daily right now. I literally just got off a call with one about 2 minutes ago. And if you want to learn more about investing in new construction in Dallas, make sure you watch this video next. It will tell you literally everything you need to know. But this study is based on an analysis of county-level home purchase records across 39 of the most populous metro areas going back to the year 2000. So in total, investors purchased $42 billion worth of homes in the second quarter, which is up 13.7% year over year, which was the largest quarterly gain in 2 years. It's actually the highest second quarter share of investors on record aside from 2022, where it was 20.8%. And another important assumption that was made in this article is that these elevated home prices and high mortgage rates have pushed home ownership out of reach for a lot of Americans, which is leading to an increase in demand for rentals. Makes sense, right? Less people can afford to buy a home. That means more people have to rent. If there are more renters, then more investors have to come buy the houses to meet that rental demand. Some more stats. Single-family homes accounted for 69.4% of investor purchases. Condos and co-ops were only 19.4%. Townhouses, 6.5%. And multifamily, meaning 1 to 4 unit properties, were only 4.7%. So for those of you thinking you have to find this perfect duplex or fourplex, just know only 4.7% of investors are actually buying those. And this is a quote from the article that I agree with and wanted to share. Investors typically prefer single-family properties as this segment of the market has posted relatively strong rent growth and lower tenant turnover rates. On a related note, there was a recent report that came out from the MBA, and it found that multifamily lending declined 49% in 2023. Now, a lot of that also has to do with the fact that there is just always less multifamily supply, but in my experience, single-family rental investment is the way to go. If you want to try for multifamily, you're going to be paying a premium for it, and the numbers aren't going to work. That, and tenants would prefer to have single-family homes anyway. And then, low-price properties, which means they're priced in the bottom 1/3 of their markets, made up 45.2% of these investor sales. Mid-price, that's the middle third, was 30.9%, and high-price, the top third, made up 23.9%. So, to all of you new or first-time investors, don't think that buying the cheapest property is the best move. Most of the time, it's actually not. And you can see here, more than half of investors are not buying even in the bottom third of their markets. There's a lesson in there. Okay, that's it for that. Let's move on and start with national housing inventory. This week we had a small increase of 5,721 more homes for sale in the country. That gets us to 41% more inventory than we had last year. And it gets us to a total of 698,473 homes available for sale in the country. A fun fact, the same week last year, inventory was only at 493,000. So much better this year. And I also want to point out, if you look at 2022 and 23, that's these two red lines, inventory actually continued to increase all the way into October, maybe October, November here. So hopefully that trend continues into this year and maybe we get up here somewhere near 800,000. But it's actually not looking like that at this point. And if rates go down even further, then forget it. But for reference, the all-time inventory bottom of 2022, we only had 240,000 homes for sale. The peak of last year, we had 570,000 homes for sale. And the same week in 2015, we had about 1.21 million homes for sale. So we're up more than double from the 2022 bottom. Still need to nearly double again to get back to a normal market. But we're getting closer every week now, which is great. Now let's look at new listings. So last week the data had not come out and I foolishly said, oh, I assume it's just going to be following right in the middle again like it has been. But I totally forgot something that I also said in the video, which was I've been getting a lot of calls from people saying mortgage rates just dropped. Do we need to list this week to take advantage of that? Well, it appears that last week, well, this is 2 weeks ago now, so in last week's video is when I would have covered this. But it appears that many other home sellers had that same idea, and so we did see a big spike 2 weeks ago. That was when the mortgage rates had just dropped, and we actually spiked even higher than the new listings of 2022. And then this week we came right back down to 2022, which is good because we've actually been quite a bit below 2020. We've basically been right in between 22 and 23 for most of the year, other than the beginning. In the beginning, we're actually tracking with 2022. Then we decoupled, we were right in the middle, and then now that rates dropped, we shot up, and now we're right on 2022. And so this week we had 67,153 new listings. But this just shows you how much the entire market depends on mortgage rates. If we want more buyers, rates have to come down. And if we want more new listings, this shows us rates coming down will bring more people listing their houses. And then the long story short is, to get back to a balanced market, we need more people listing their homes even than we saw in 2022. Then the other thing to know is you will see less and less new listings every single week, or you should, unless somehow this continues up if rates keep dropping. But you should be seeing from here on out seasonally less and less new listings every single week for the rest of the year, which means if you're a home buyer and you're passing on good houses hoping that something better is going to come on later, the truth is you're going to have less new listings to choose from every week. So what I always say to my home buyers is if we look at a house, everyone agrees it's at least an 8 out of 10, then we need to offer on it. So if you're passing on houses that are 8 out of 10s, that's a mistake. You're going to have less new options to choose from. Okay, moving on to pending sales. You can see the weekly pending contracts has just been slightly above 2023 all year. This week we came back down to almost exactly, actually the last 2 weeks were almost exactly where we were in 2023. Technically it's about 1% more homes under contract, but we have 365,681 homes under contract, which this week we literally only have 600 more homes pending than this same week last year. So the most interesting thing to me all year is we have had way less people applying for mortgages this year, and yet somehow we've been having more sales than we did all of last year. Then the last thing we cover nationally is the percentage of homes having price decreases. Every year it's normal for a third of homes to take a price cut before selling, and looking at the national chart, we are at 39.4% this week. That's the percentage of homes that had a price cut. Last year we got as high as 39.2%. The year before we got as high as 43.2%. And you can see it's normal for this number to be going up all the way into November. You know, that makes sense. As we pass the summer selling season, the homes that didn't sell, that aren't desirable, will continue sitting on the market having price cuts as there's less home buyer demand and more new inventory coming on. But look at this. This is about a month now. For the last 4 weeks, we have been stalled out here. And you can see that's not what happened in the last couple of years. We did have a little time here where the number of homes having a price decrease slowly declined. We had a little flat one here, but certainly this is out of character with the last few years for the number of homes having a price decrease to stall. And of course, this is based on mortgage rates. If mortgage rates actually continue down or even hold steady, we may actually see that this is the top for the year of the number of homes having price cuts. This number may actually slowly start to decline. But of course, that's a huge if rates stay and continue to drop. But all we know for now is this is unusual to have stalled out this early in the year, and it would be about the same peak as we had last year, just at a different point in the year. All right, moving on to mortgage rates. So last week, we started out 6.55, got down to 6.49, back up to 6.58, and we ended at a 6.56, so almost no change, a 0.01% change for the week. And this is a good thing. I remember at the beginning of the year, what I kept saying is what we need this year is literally just stability. We need mortgage rates to stop swinging like crazy. We need to see a lot more where people know, hey, if I list my house, I know I'm going to be able to buy at a rate around this, and I'm good with that. That's what's going to help more people list, is just stability in rates. So it's very nice to see a week with almost no change. Then here we have the Mortgage Purchase Application Index, and this week we actually saw a 3% increase in the number of people applying for mortgages. So it's nothing too crazy, but you can see we've got a couple of weeks now of things going up. We're not out of the range we've been in, but we're actually getting much closer to where we were in 2023. But I say this every week, there's no reason to believe mortgage demand is going to grow significantly with rates this high. So I don't expect things to start running up like this, not at all. I expect them to very slowly come up here, but we're also not that far from seeing this big seasonal decline. So I don't know what's going to happen next. All I know is we saw a 3% increase this week, but we're not going to see the real mortgage demand growth until we get below 6% rates, and not just for 1 week. It's going to have to be sustained down there. And that's why you have been seeing this whole time, new construction has been offering below 6% rates. And actually, I got some under contract now that are as low as 3.99% for new construction. So that's crazy low. Don't remember the last time I saw 3.99, but they are back with some builders. And anyway, new construction, that's where we have the proof that real mortgage demand is there below 6%. So before we move on to the local markets, if you're considering buying a home in Texas in 2023, a couple of things. One, as I mentioned earlier, if you are considering buying a new construction investment property here in the Dallas-Fort Worth area, you absolutely have to watch this video next. Two, if you want to make sure you don't go broke buying a house, I've made a home finance course for you. This is going to help you figure out with 100% accuracy how much money you actually have based on your actual spending habits to spend on a house every month, as well as how much house that number will get you in today's market with today's rates. It takes into account everything all the way down to your income tax bracket. It's better than anything else you'll find on the internet, and it's a no-brainer for anyone who wants to have peace of mind about their home purchase. Or if you're still a ways out, you just want to be fully educated and know everything there is to know about the home buying process here in Texas, I've made 2 courses for that. One is for new construction, one is for pre-owned homes. They're very different experiences. They have different deposits, they have different contracts, they have all kinds of different things about them. So pick the one that suits you best. Links to all of those things are down in the description below. Now let's move on to the local markets, starting with the MLS data of Dallas County. This week we had 582 new listings. That's 10 less than last week. 352 closings. That's 69 more than last week. Of the homes closed, 67 were immediate sales, meaning they contracted within the first week. 334 went under contract. That's 34 more than last week. In total, there are 2,200 homes either under contract or in pending status. That's 21 more than last week. Now looking at Collin County, we had 351 new listings. That's 54 less than last week. 253 closings. That's 34 more than last week. Of the homes that closed, 39 were immediate sales. That's the same as last week. 186 went under contract. That's 4 less than last week. In total, there are 1,828 homes either under contract or pending. That's 6 more than last week. Okay, moving on to the Market Action Index. If you've never seen it, it takes into account all this data, puts it into one easy to read graphic with a number. Anything at 30 or below is a buyer's market. Anything above a 30, we're asking how much of a seller's market are we in? Right now we are at a 40, which is a slight seller's advantage. You can see we had a drop in median list price this week. That's normal this time of year. Everything's cooling off from here until the end of the year. Just know that every week. Average days on market had a small tick up. It's 1 day higher than we've been so far this year. Median days on market, however, is firm at 49 still. Number of homes having price decreases, just like the national market. It's been pretty flat for the last month. This is that interesting number, the number of homes relisted. So this would be homes that didn't sell before. They saw that these rates came down and they said, we need to list now. 9%. Well, 8.75 technically. That is a lot of people, but that's good for our new listings data. It's just interesting to see how so many people think the same thing all at once. Rates came down a little, we have to list immediately. Hopefully that shows up in the new listings data next week nationally. Inventory, another small climb. That's the good news. 4,836 homes available. And then the market action index is right around where it's been for several weeks now. Looks to be holding steady around 40. So that's Dallas County. All it's telling us, everything is looking normal. Let's move on to Collin County. Collin County, median list price held steady. Price of new listings back at the bottom of the range. Average days on market, barely above where it's been. Median days holding strong at 42. Price decreases have been flat for a while, but you have to remember 53% is higher than normal. This is because a lot of these homes are competing with new construction that's offering, now down to 3.99% rates. So a lot of the homes here were built in the last few years, and you're really comparing, do I buy this old home for a little bit less, or do I go new construction, pay more, but get a way lower monthly payment because the rate's way lower? So that's what contributes to, the longer days on market and the higher price decreases over in Collin County. This is what a market looks like that has a lot of new construction competition. Their inventory actually had a small decrease. Not a big deal. That's 1 week. They've got a nice, healthy amount of inventory there. And again, we're always looking for trends. We're not going to worry about 1 week data that inventory started coming down. Let's wait a few weeks and see what happens. And also, their market action index does look like it bottomed a couple weeks ago and it's climbing again. Again, we're looking for trends. It's not unusual given that rates came down, but if rates had not come down, what we're expecting is this number would keep cooling off through the rest of the year, but rates did come down, so we see the market slightly heating up. And they are also a slight seller's advantage, but they're only a 38, whereas Dallas was a 40. Okay, moving on, looking at pending sales. Dallas County saw a tick up this week, up to 1,833 homes. Again, we've been following very closely to those 2022 numbers, significantly higher than 2023's numbers. And then looking at Collin County as well, way more sales happening in Collin County even than the previous 2 years. We were pretty flat this week, 1637 to 1639. So we have 2 more pending sales this week in Collin County. Okay, now we're moving on to the hottest and coolest cities. We usually do zip codes, but the data is not loading this week. So just looking at the hottest cities, these are ranked using the market action index number we talked about. 30 or below is a buyer's market. So starting with the hottest cities, Carrollton and Ferris remained at number 1 and 2. Duncanville heats up 2, Louisville cools off 1, Lancaster cools off 1, Balch Springs heats up 4 spots, Garland heats up 2, Plano cools off 2, Grand Prairie jumps on at number 9, and Saxe jumps on at number 10, and Grapevine and Richardson, which were numbers 7 and 8 last week, fell entirely off the list this week. Now looking at the coolest cities list, Leonard, Sunnyvale, Van Alstyne, and Prosper all remained in the top, the top meaning the coolest 4 spots. These 3, of course, are buyers' markets. Blue Ridge cooled off 3 spots. Rockwall and Anna remained. Lavon heated up 3 spots, so Blue Ridge and Lavon actually just switched places this week. Salina remains at number 9, and this week Melissa jumps on as the hottest city on the coolest cities list, and it knocked off Nevada for the number 10 spot. As always, remember, if you're looking to buy or sell in the Dallas area, whether it's next week or next year, I'd love to connect. Call, text, or shoot me an email. All that is in the description below. Thank you for watching. I'll see you in the next video.